When we look at the long-term data of crypto, so for example this year, the long-term price chart of Bitcoin, it seems to be just a matter of time until we hit $1 million per coin, maybe $10 million per coin, because we came from very humble beginnings, right? Just a few cents per Bitcoin. While this is the popular narrative, once we look at the data a bit more closely, things start to look slightly differently. Now, when we look at this price chart here, and we don't take a linear scale, but a logarithmic scale, now things are not the same anymore. As in, the percent increases we get over time, they tend to decline. So on a logarithmic scale, the vertical distances are constant percent changes. On a linear scale, the same distance are US dollar changes. But really, we are interested in how many percent we can gain. Have a look at this support line, for example. It has some curvature, and that curvature declines, as in the percent growth of Bitcoin diminishes. We can also draw an upper bound, so we connect the price tops, and this tells us an even worse story, as in Bitcoin might have a very hard time growing much higher compared to where it is today. Now, it's not just those random curved lines on that chart that make us question things, because we can also have a look at the rolling returns. Have a look at the following. This is the 1 year return for Bitcoin. So if you bought over here, you held for a year, you would have gotten this return here. 1 just means that we are break even. 4 means we made a 4x within a year. So that's 300% gains. And again, this is on a logarithmic scale. So have a look at how we are diminishing in terms of 1 year performance. The bull markets are less and less extended. And while at the very beginning, people made almost 100x returns, that declined to 25x, to then 11x, to recently just 3.5x within a year. What's also interesting about this chart is that even though the bull markets tend to go down in returns, what's not going down is the severity of the bear market. So that's this lower line over here, right? This is not going up. So this is not just a matter of volatility declining over time. The volatility to the downside is very much still intact. The crash in 2019 was worse than the crash in 2014, at least over the span of a year. And the crash in 2022 was very comparable to the crash in 2014. So a drop of roughly 80% within the span of a year. So really, it's just the upside that's getting worse over time. What's also not that great, at least medium term, is that we tend to move from one extreme to the other. So the peak of the bull market to a subsequent crash, another peak, another crash, another peak, another crash. So we're not crashing and then only go halfway through and then crash again. We always go through the peaks, and we've just seen potentially another peak, which would indicate that going forward, Bitcoin might be headed towards a bear market again. Now, nobody knows how much longer the structure prevails, because it would indicate that at some point Bitcoin would just go down from here, right? If you continue with those lines further, we draw them like this, then Bitcoin might find its ultimate top at the end of 2027. That's also quite unlikely. So at some point, it's very likely that the structure will break. But currently, again, given that we've bounced from one extreme to the next, it seems like we are on the way down. And the great narrative that Bitcoin's going to hit $1 million or $10 million, it seems to be really just that. A narrative. I don't really like doing it, but that's how the YouTube game works. That's how the algorithm works. Please give this video a like if what you've seen so far has been useful. Thank you very much. Have a look at Bitcoin relative to the Nasdaq 100. It barely outperformed in the last 8 years. And it really did not outperform at all in the last 5 years. And one might argue that technology stocks are less risky than Bitcoin, at least in terms of price volatility. And so I'd argue there's a case to be made not to just buy and hold all the time. Bitcoin can be extremely volatile. It can drop 60, 70, and 80% in a year. And it seems like the downside volatility is not going away at all. Yes, the growth is slowing down, but the bear markets are not getting less severe. And so because of that, I was looking for approaches to time the market. So this here is Bitcoin with the 200-day simple moving average. We could simply go long whenever Bitcoin is trending upwards, and we could exit the market whenever Bitcoin is trending downwards. So you'd sell over here, we would buy back in over here, and then have double the number of Bitcoin because Bitcoin fell by 50%. Alternatively, we can even bet on falling prices during that crash. So we are betting on both directions. Now 200 days is a very arbitrary number, because why shouldn't we take the 100 day or the 50 day? When we take a shorter duration, we tend to sell earlier at the end of a bull market, and we don't wait until we've got this massive crash. We also tend to enter earlier whenever we get into bull market territory again. The problem, of course, is if we get too short on the duration, that also means we buy and sell quite frequently, which incurs costs and which also incurs bad trading signals, as in we might be buying high here just to sell low again, and that can happen several times in a row. So what's the ideal moving average if we wanted to trade according to one? If we don't just want to buy and hold, but we want to find the ideal trend following strategy. And here is the answer. There are two moving averages that tended to work very well for Bitcoin. And that's if you trade just once per day at midnight UTC time zone. You're not worried about the price movements within the day. The best moving averages are the 44-day simple moving average and the 125-day simple moving average. So on the x-axis, we've got the moving average duration. On the y-axis, we've got the annualized performance. The black line is the comparison to just buying and holding Bitcoin. And so following the trend is a good idea in Bitcoin. Had you just bought and held Bitcoin during the testing period, you would have gotten this return in white. Again, this is a logarithmic scale, but when we trade according to the 125-day simple moving average, you get this return. And if you trade it according to the 44-day simple moving average, you're getting this return. So both returns are viable. It depends on how often you want to trade. This is then how that looks like on a chart. So we do tend to get in and out relatively frequently. Currently, we should rather be betting on falling prices. We are below both moving averages. Here's the return using the 44-day simple moving average measured in BTC. So our Bitcoin balance goes up because we time the market by going short whenever we tend to rather fall. And so I just try to be opportunistic about the situation. I don't know where Bitcoin will be in a few years from now. The returns tend to be diminishing. It seems like they're not beating tech stocks anymore. And buying and holding can be very dangerous. It can crush a portfolio very easily. And so I don't want that. I prefer to rather outperform. I prefer to time the market. And while we cannot know if these kinds of rules will continue to work in the future, I think it's better than just buying one Bitcoin and doing nothing with it and potentially get into a very ugly bear market. Again, we've seen the rolling returns. By the way, we can also look at Bitcoin relative to the Nasdaq 100 with its rolling one-year return. The trend looks very similar. The tops align even better. And while the recent bear market doesn't look as severe relative to tech stocks, it still appears as if we are rather on our way down from here. And so that's a strategy I personally follow as well. I prefer the 44-day to the 125-day because it did outperform slightly. But of course, it also means more trading. If you don't want to do the trading yourself, you can also just deposit your capital in a platform like Hyperliquid. I've created a copy trading pool on Hyperliquid that's in the premium membership. Everything is explained over there. It's thebitcoinstrategy.com. So that's for the lazy ones that don't want to do the execution manually. Hope you got some value out of this video. Feel free to give this a like. It will help the channel grow. Feel free to also subscribe. I publish videos regularly. See you next time here on YouTube or potentially even see you in premium. Cheers.